Welcome to the latest episode of L.I.F.T.S, bringing to you the final installment of our two-part podcast live from the Connected Health and Fitness Summit in LA. We took to the floor interviewing some of the industry's leading experts, discussing everything from the latest product innovations through to trends and conversations shaping the sector as we know it. So please welcome to L.I.F.T.S this week's episode, Krystal Zell, CEO at Tonal, co-founder of Row House, Debra Strougo, Jeff Yasuda, co-founder and CEO of Feed FM, and Trent Ward, founder and CEO of FORME. And by the way, if you get anything from these podcasts, please do us a favor and share this with one or two other people. The more people that listen to this, the more we're going to be able to bring to you this type of content. Thank you very much for listening.
Krystal Zell, CEO of Tonal, thank you so much for coming on to L.I.F.T.S at Connected Health and Fitness.
Well, thanks for having me. I'm super excited to be here.
Well, I'm excited because I geek out on Tonal. I have a Tonal in my house in New York. It's actually, even though it's a beach house, the thing I look most forward to, and my wife will back me up here, is a Tonal. I have really enjoyed it. I think you guys have built an incredible piece of machine. And this is someone, who I literally build products and software for the fitness industry. So kudos on the product.
Thanks so much.
Yeah. So you're at Connected Health and Fitness, and I don't think we could have this event without a brand like Tonal here. You did a great job on the panel this morning. Just what do you think 2023 was like and how it wrapped up? And what do you think the next couple of years holds for this industry?
Yeah, it's a great question. It's just a really kind of pivotal time, I think, right now in connected fitness. There's been so much great entrepreneurship and innovation over the past several years in connected fitness. But with COVID, you had all kinds of, different consumer behaviors, as we know, in terms of choices that people were making, around their fitness. And then we kind of came out of COVID and people started to make different choices, and everything's just kind of sort of sorting itself out. And I think 2024 is going to be sort of a really interesting year for where things sort of settle in to more of a normalcy. So I'm excited to see that. I think 23 was just a year of people figuring those things out, if that makes sense. And I also think it's sort of this period of time where people are thinking about, in terms of fitness, they're becoming more and more and more focused on their health. So even, it's funny because in the pandemic, everybody got really focused on their health, right? And all the things that they could do to improve their health. And coming out of that intensity is just growing. And I think people's awareness and knowledge of how to achieve their goals is growing as well. And the consumer's getting more sophisticated, the industry's getting more sophisticated, but there's still so much interesting innovation in the space. So I think it's an incredibly exciting time.
One of the things that you hear a lot from the commercial club side is the popularity of strength training since people came back from the pandemic. What have you, you're purely a strength product. What are you seeing? What has your experience been in terms of the trend to strength training? And then also the type of people that are getting involved in it? Because traditionally it's been a male thing.
Absolutely.
And certainly we're hearing that it's a little bit different to that. So how would you respond to that?
Yeah, so for our business, we absolutely see a push into strength training for all kinds of reasons. Good reasons around overall wellness, reasons around active aging and people wanting to protect their ability to do all the things that they want to do as they age. So a couple of things I'll highlight. We definitely have more of a male audience. So we're more 70-30 in terms of the buyer. But users of our product are more like 60-40 because the product often goes into a household like yours, Mo, where you may have somebody else in the household that uses the product. We are seeing more and more women start to use tonals that are in their homes, that their husbands maybe or partners bought a year ago or 2 years ago, and they're starting to come on the platform, which has been really, really exciting. We're also seeing in that population too, women lifting more and more weight, pushing into and growing, and their strength score is really growing. And so that's a really exciting trend, especially as the female CEO of the company. I love seeing that. I think that's terrific. And then I would also say we're seeing this also an older demographic that's really getting into strength training. And I think it's sort of that 50 plus age demographic. And I think a lot of it are people who maybe previously in their lives had been interested in strength and maybe were an athlete, maybe they played on a team and they just want to get back to that feeling of fitness in order to sort of age well. And so there's tons and tons of awareness about strength training in that older demographic as well. So it's a great time to be in strength.
What are you seeing? When I met, I'm not sure whether it's you or one of your colleagues at CES, probably 2016 before the pandemic, and they were talking about the fact that you guys will, the fact that the research around strength training is fairly limited in terms of the amount of studies and the size of people, and what they were saying at the time is you guys will have a huge sort of base of users and research that hasn't previously existed. If there's anything you can share, like what are some of the things that you guys have learned about, you've mentioned one, which is the weight that people are lifting, but is there any interesting things that you're finding out as an organization about strength training, what it's doing for people, how long they're using it, any interesting consumer insights you have to share?
Sure. So we, our data set for last year, so the full year sort of data set, 177,000 active users of the product. So that's the data set. We have an average of 12 workouts, essentially, but we have a large population. The majority of the users are working out 3-4 times at a minimum a month, and then it averages out with with other users, these secondary users. So that takes us to 12. So we narrowed it down to that. And those average workouts are 35 minutes. And then we looked at how those workouts affected the population, and we saw dramatic growth in overall strength scores of those users. And and I'll just to highlight a few. So this 55 plus age group that I talked about, their strength score, from a new user across a year, grew by 73%. So massive improvement in their overall strength abilities based on their strength score. And then women, we also saw of the overall women population from looking at new users and what happened in a year was a 53% growth in strength. So we have an incredible amount of data. This is all, by the way, in the Tonal State of Strength report that we published in December of 2023. So you can kind of go back, anybody that's listening, you can go and pull that report up and you can see all this data, but we have an extraordinary data set. So we track every move. It's all anonymous, by the way. So there's no, it's all very protected. We don't do any sort of data sharing, or it's all completely privacy protected. But it's this great data set that we can analyze and see how our members are doing. We see a lot of adherence. And that's great. We love the adherence. We have incredible retention. I do think that strength is one of those. One of the things I think is fantastic about strength training is I think as people really get into strength training, they tend to continue it. And there's not as many substitutes for it. So from a cardio perspective, it's nice to have lots of options because on any given day, you're like, I don't really feel like going for a run. I'm going to go for a ride, or I'm going to take a class, or whatever it is. Strength, there's not a lot of substitutes for strength. You just kind of have to do the work. And so we do see our members are very loyal to the product, and the product has a big impact on their lives.
Is there anything you've seen that's been surprising out of any of the data that you've got that you wouldn't have imagined?
Well, I mentioned it earlier, but the women lifting heavier weights, I was surprised by because of the sort of intimidation factor. And that's been terrific to see. There's a big myth, I think, for women especially, that is for especially certain generations, that you're going to bulk up if you do weight training. And for women, that's just actually not true. I mean, we don't have the testosterone for that to happen, right? So that myth busting is starting to finally happen out there in the market. And you actually see it. I think it's great. There's innovation all around the market. Orange Theory is doing strength classes. It's happening everywhere. I think ClassPass published something that said that their strength class uses for ClassPass has grown like 90+% in a year. So you're just starting to see a lot of exciting things happening in strength.
Yeah, so look, I think that report is excellent. I think we might have covered it briefly in a former podcast. So anyone that wants to get that report, it's available publicly. Really interesting data around the growth of women in strength. But also something that I've noticed is you've done a good job in really providing the GPS for strength. So when you think about cardio, data has been available for over 10 years, maybe even 20 years. You know how fast you're running, you know how fast, like there's GPS in your watches, there are bikes that provide power, but strength really hasn't been quantified. And I think something that Tonal's done exceptionally well from a UX perspective is to not only quantify strength, but also help with the progress of that. So in other words, like one of the things that I found, and I've been lifting since I was maybe 15 years old, but Tonal identifies exactly where you are and then pushes you to do a bit more. And I think that's been eye-opening, because if you're at the gym and if you've got an 80-pound dumbbell that you're doing like a press on, you're going to stick with 80 pounds because emotionally you don't think you can go up to 85, right? But Tonal can incrementally not only increase that for you, but then also help you when you can't move the weight. So it encourages you in ways that I think is really hard to replicate in the real world, and it's quantified strength in a way that hasn't really been done before, and they've collected this vast amount of data. I think there's a lot more you will be doing with it that you have not done yet. I think a lot of that has led to the success that you've had. But what I'm curious about, though, is, and this came up in the conversation this morning on the panel, is you are a premium product at a premium price point. You are the most expensive subscription out of any connected fitness product that I'm aware of. I think you're at $59.
That's right. Yeah.
Right now, the market has evolved. People have certainly gone back to the gyms. Gyms are lacking in innovation. What other channels have you explored? What are you looking at as you look into 2024 and 2025 for distribution? Because the TAM and the SAM, I think, have been recalibrated in this post-pandemic era.
Yeah.
So how do you kind of view the next stage of growth for Tonal?
It's a great question. So let me talk about the price first to start. The $60 a month subscription, it certainly sounds high, like compared to other connected fitness products. However, what I would say is we think of ourselves more as helping substitute for personal training, given exactly what you said, which is we're going to help you push that little bit of weight and that little bit of rep so that you can get to the next threshold. And so the device, along with the classes that are led by amazing instructors, are going to really help you get a differentiated set of results than you're going to get from anything else that you can do, other than really spending a lot of time with a personal trainer. Yeah. And if you think about what a typical personal training session costs, just one training session, $100, $120, it can be as high as $150 or more in certain geographies. When you kind of compare and contrast, it goes back to like how much value are we giving to the member? We really believe that there's extraordinary value that we're giving back, that at a price compared to is a half an hour of a personal training session a month, right? So we look at it that way. Nonetheless, I think the biggest thing is, there are constraints to space. Like if you live in a New York City apartment, you may not have enough space. And there's constraints to being a $4,000 price point device, because that is certainly expensive. I think that, from a long-term, we have aspirations of being the leaders in strength. And so we have, like a lot of products started at this kind of creating what is the ultimate device. So a lot of our thought process is around how do we take what we've learned about strength and begin to make it a bit more accessible. And so we're definitely going to spend time thinking about that. There's nothing to say about that yet, but it is what I think about. Like, how do we take what we're learning about strength and what we've created for the market and begin to push into a bit more accessibility from an addressable market perspective. But nonetheless, having said that, we still have only tapped into a portion of the market. We're only really 4 to 5 years old, and we actually don't spend a whole lot on marketing. We did for a while, but we don't anymore. And so there's still...
How are people finding out about it? Just
a lot of word of mouth,
really?
A lot of, and we pulled way back on marketing to kind of see what could the product naturally do, and have been sort of pleased with what we've seen. But I think we still believe there's a lot more in our addressable market we haven't gotten to yet that we're excited about. And we're going to keep innovating on the product features to make the product continually exciting so that we can keep reaching out to the addressable market we haven't reached yet.
What do you think that is?
Well, I mean, with the advent of capabilities around AI now and what you can do, AI works best when you have extraordinary data sets. And we have the most extraordinary strength data set there is. And when you think about people's individual goals, the ability, the potential of being able to articulate your goal and then have the intelligence and the data set then feedback, here's what you should do to achieve that goal. So I may say something like, I am, the device knows me, I'm prepping for a ski trip. I'd like to spend the next month improving my balance, right? Or something as simple as that. That's always been a really hard thing to do, like real personalization in that way. We're reaching a tipping point where that's not that hard anymore. And so we're very much leaning into how do we get into truly personalized opportunities. We're not there yet, but we are actively working hard on that. So there's so much opportunity to get to real personalization, leveraging the modern tool set and this data set that we have.
And with the addressable market, then, like, what do you think? Where are you, and what do you think that is? Are you comparing it against what Peloton have done, for example, as a benchmark, or in the strength space, have you measure it in a different way?
I think about it as none of those things. I think about it as a function of lifestyle and willingness to invest. I actually don't come from the fitness space. I come from a deep consumer background where I've spent so much of my career really thinking about consumer needs and how do you meet those needs best. And so I think about it as all the ways in which our product can meet very specific consumers' needs. It can meet that new mom's need to work out in the home that honestly there's no other. You could buy a bunch of weights and have a weight room, takes up a lot more space, maybe not as desirable as this product. It could be somebody actively aging. It could be somebody recovering from a shoulder surgery because things can be tailored for them. The addressable market, it really is based upon this consumer needs. Now, there's the layering of, it certainly is a more expensive product. However, we have buy now, pay later options. And when you do those on a monthly basis, it's less than, a high-end gym membership. So that's accessible. Anyway, so I think, and I will say just a couple more data points, like we definitely tend to serve households with multiple people in them. And so you get a ton of value if you're that kind of a household, because we have an unlimited number of users. Like you can add your family. We have a board member who has 3 daughters, and all 3 of his daughters and his wife and he are all using the Tonal all the time, so much that they have to schedule their time on it in their household.
That should be a feature.
That's right. So I guess I look at it like that, of like, who are the consumers whose needs that we can really serve? And then how do we use things like a FORME and buy now, pay later to make it accessible to them?
Right. Well, look, every Tonal member, and we talk about this, right? We talk about our Tonals more than our Pelotons, right? And I've talked about my Tonal to you many times. But this morning on the panel, I think it was Cheryl from Planet Fitness made an interesting comment in that, they are a high value, low price product.
Right.
And she said that, well, you might have a Tonal at home, or you might go to SoulCycle, but you still come to the gym. You may still have the gym membership to supplement what you're doing there. Have you thought about the relationship between Tonal and the gym community? Because I think that is, we talk about this all the time, but it's an untapped area for quantifying strength.
Yeah, I 100% agree. So we are not in the business at the moment of coming up with technology that helps you measure everything in a gym. I do think that's a huge opportunity, right? And then the ability to integrate all of the tracking in a cohesive way, so that as an individual, I can track everything that I do and see it all in one place, and then use that to, and then, we talked about this concept of AI layering on over time some advice along the way, which says, hey, it's been 2 weeks since you've done any meaningful stretching. You probably should do a stretching routine, whatever, start adding that in, whatever it is. So I think that that's a pretty exciting opportunity in fitness. And so I will tell you, we haven't cracked that yet. So for those entrepreneurs out there listening, I definitely think that's something, somebody will crack that eventually and kind of figure out a way to integrate that. We're still focused on this sort of at-home market and this at-home experience, and thinking about different opportunities to make it more accessible and to make it even better. I would love to be able to track everything I do. Like, I do lots of things. I obviously have plenty of Tonal workouts, but I every now and then I love to go to a boutique fitness class. I love to do a lot of stretching. I do a lot of walking, a lot of running. And I certainly don't have any cohesive place where that's all tracked. I don't think any of the tools today really allow you to do that well.
Right. What if you go to a home, I could imagine if you went into, like, say, this hotel, it would be interesting to have something like that in there. Have you thought of some of these like hotel partnerships?
We do.
Like
we have a bunch of hotel partners. So that's been great for us, especially a lot of really high-end hotels that care about their gym experience and invest in the gym experience. So we've been able to go into several hotels, and we love to do that. So we've explored other types of distribution just like that.
Right.
Yeah.
And my final question then, this is looking at what's happening in the future of the space in general. What are some of the things either that you've heard from here or that you're thinking about as in your role within the company that are things to probably keep an eye on over probably the next 12 to 36 months? Is there any interesting things broad ideas that you think, okay, this is an interesting space, like you said, maybe integration into other things, or anything that the listeners could be tapping into?
Well, I think the overall trend around wellness is really interesting. I do think the trend around the GLP-1s, which is, we didn't talk about it, but obvious there, and I think a lot about the fact that the GLP-1s are incredible for people who really, really need them. A lot of the current users of them don't necessarily really, really need them. If you listen to a lot of Scott Galloway, for example, he talks about that. There's data around that. And then there's this very significant downside of the GLP-1s, which is you lose significant muscle mass, between 20 and 35%, right, is what I've seen quoted of your muscle mass.
It's actually closer to 40%.
As close to 40%.
40, yeah.
So I've seen, So there you go. So even higher. I don't think we understand the repercussions of that yet from a health perspective, right? Because we don't have enough data. And so I think how the industry evolves in the context of, I think I'm not qualified to pass any opinions or judgment or anything about it. I'm just saying I think it's very interesting. And I think then the role that fitness is going to have to play alongside of these GLP-1s, and we're seeing a ton of innovation already there, right, between the gyms and et cetera. But clearly there's a lot to learn in this space. I actually think probably it's going to be net really beneficial for fitness over time. There's a whole bunch of conversations around the effect of GLPs on companies like Nestle and others that it's very impactful. But I think for the fitness space, it's going to be net positive, because people are going to need to build back the muscle mass and make sure they're having a healthy lifestyle alongside of the medication, so that they can have as healthy of a body and a life as possible. So I think there's going to be a lot in the next 18 months that we're going to learn that we don't know today in that space.
I was talking to someone about this the other day, and they said, like, particularly for people that are obese, that's not people that are overweight, that's people that are really, really overweight. That those people are probably, gyms are not designed to accommodate that, type of person, and they're probably more going to be inclined to figure something out they can do from home initially to sort of get them to a stage where they can move around a lot easier and get them in. So I think what probably what you said, I didn't really connect that, but that's an interesting connection between people that have been on that and people who need to do some strength training that are not yet confident to go into a regular facility. And particularly because your product also doesn't necessarily limit too much by size because of the the cables and everything. It's not
there's no limitations, and there's maximum privacy. So so it can accommodate that potential, and just as somebody's building their confidence if they've never worked out before, right? And we know gyms can be very intimidating for people as they're going through the process of beginning their fitness journey. So certainly that's very interesting. Yeah, a lot ahead. It's going to be a big year, I think.
Well, Krystal, thank you very much for your time today. Appreciate it.
Thank you. Thanks for having me.
Thanks,
so
Krystal.
nice.
I'll just say one last point. Don't raise the price anymore.
I'm not raising the price anymore. I promise.
Thank you. Debra Strougo, the most featured guest on L.I.F.T.S, now at Connected Health and Fitness. I mean, she is, right? She's the most featured guest
so, yeah.
on L.I.F.T S. Thanks for coming on again.
I like the furniture.
Thanks
like
for
the
coming again.
wallpaper.
No, we
What's
love
the
having you.
expression? The US-based expression.
You're the it girl of the fitness industry.
Oh, thank you.
She's the everything of the fitness industry.
Thank you.
Gender neutral, but we're talking about this funny story. So Matthew and
Gender
I,
neutral. What does that
we're,
mean?
well, meaning that she's the it guy and girl.
Oh, okay. All right. I get it. All right.
Right.
Okay.
But Matthew and I, so this conference is all about great sessions. It's a really well put together conference. Great sessions, great speakers, amazing attendees, a lot about the networking, and a lot happens before, like in the workouts, which we do in the morning.
And what do you just as we're going into that, like, tell us what workouts you've done. There was a bit of a session yesterday, which you did.
Well, you could always count on Mo to do a run. You could always count on Mo to do a run. You could always count on you to go into the gym and lift something heavy.
Heavy weights.
And I'm on my hot yoga craze still. I did hot yoga 2 days here at this conference.
And they also had a breathwork thing this morning. Did you go to that?
They did. I walked by it. It looked really good. Put on by Apollo Neuro. But then the dinners are a thing. Happy hours are a thing. So Matthew, you and I went to dinner yesterday, and we thought we were in the right place.
Well, you invited me, and I didn't know the gentleman who kindly invited me to it. So clearly, I went then expecting not to know anyone really who was there.
That's a good point. So we walk up, we follow the directions on the invite. We go to the private dining room, order our drinks, and we're looking around, and we're like, these people don't look like our people, right? They had jackets on, some a bit stuffier. They were looking at us like, who are these clowns?
And it's not all about the looks, but
No, in this case, it was about the looks. I mean, it was very clear who was from the fitness industry and who wasn't. And I just had this feeling, and it's like, okay, no, this is not the right place. So after we got the drinks.
But I kind of thought it was because it was. I understood that they were from the sort of more investment community, and they're all kind of in suits, and they looked like they were bankers and investment. And we went around, and everybody shook everyone's hand and exchanged names.
Oh, that's funny. We said hello to everyone, exchanged names. They were like, hi, Mohammed. Yeah, hi, Matthew.
there was a movie written about this. What was it?
And then they ordered. Then it was the drinks that came out. So we all
got drinks, we're hanging out. And finally, it occurred to me, because people were texting me saying, hey, I'm here. Where are you? I'm like, I'm here too. So I went and I met with the host, and he insisted it's the right room. I said, no, it's not the right room. We finally found the right room, and it was a wonderful evening that Debra will get you to the next time.
Yes. And you said you ordered drinks on their tab.
Yeah.
Right?
Yes.
Yeah.
No,
well,
but
the
then,
guy did say, just go with the drinks and everything. Wait, who were they from? They were from their big accounting
They were from
firm.
Deloitte. No, but I went up and I took care of it.
Okay.
They were
was
from
good of you.
Deloitte. And I'm like, he brought the drinks down, and he basically was like, well, they're not really going to know. It's okay. It's okay. I said, no, I'm not going to do that.
He did offer. He did say.
Oh, did he?
Yeah, he did. He said, oh, it's all right. Take the drinks.
I didn't know
And they
that.
obviously had a
Okay.
very special room as well. Like it was.
Well, it sounded like you guys had a great dinner, and it was a wonderful conversation with leaders of the industry. And I don't usually get FOMO about anything, but I have FOMO about that. But I did the right thing. I had prior committed to another dinner because,
Yes.
as you say, there are lots of things going on. And I didn't want to go for bigger, better deal. I just didn't want to keep thinking like, which is the right one. And so I stuck with my commitment,
Are
and
you
I
saying
went.
we did that?
And no, I'm not. No, I'm not saying that you did that at all. I'm just saying in my own thing,
Yeah.
it was like, well, I got to one and now there's another. I didn't want to change it. So I stuck with my plan, and I also had a wonderful dinner. But it just goes back to the fact that there are so many interesting little subsets of community and conversations that are happening here, because I heard about the conversation you guys had over in this other restaurant. We're in a different conversation, and just it goes back to the people that are coming here are the leaders and the innovators really in the fitness industry, brick and mortar, wearables, product, everything, right? The labs guys are here, just so much stuff, D2C product, and it's just been a great couple days.
And it's grown. It's really grown year over year. It's gotten better. Yeah.
And today, then, we're talking about women.
The Women in Fitness Forum. So I had the pleasure of leading the Women in Fitness Forum yesterday. So it was an intimate subset of mostly women, but we did have men join the conversation because it's very important to everybody. And it was just a group, and we really kind of covered the topic of the female experience. So less about, the gender gap or anything like that, more about the female experience, which is extremely important in the fitness conversation, right? I mean, it's a massive part of our population, the female body. And we talked a lot about how earlier in the fitness industry, it was like, look great naked and sex sold and all of those types of things were kind of what the fitness industry is imaging and advertising look like. And now we're going really, really deep down kind of the gender, the body's needs, like deeply into it. And obviously...
Well, we're giving an example of what you mean.
Well, men and testosterone therapy and all of that, but now women, and it's been a big focus of this conference, the brands that have stood up and really embraced the women conversation and embraced the things that are going on from a woman's, hormonal cycle to fertility cycle and the questions that they ask. So I was saying yesterday that, as a fitness instructor way back in the day, I would get approached by women saying, is it safe for me to work out on my period? And so this is a very interesting time now for us to really continue to own the trust and own the conversation of the female consumer's needs. And where do you do it? Do you do it at the brand's level? Like some brands are really for females. Do you do it more at the initiative level where we really make sure that a female's needs are met in programming about, aging gracefully or whatever, because a woman's body is different, or do you not do it at all, right? There's all of these questions. And I think as women are getting more healthy and more fit, they're starting to ask more of these questions. And so it's important that the businesses that are innovative and moving forward are really thinking and addressing these needs of women. But you're both men, so what do you think about that?
Well, I think, one, from a product perspective, because I'm always having like my product hat on, we've been working and brands have been working to have products that are differentiated, even though you might have one product, how you use it is going to be different. But do you see more and more companies doing that or do you think that brands have to be for women or for men, or would it be possible for one brand to really serve everybody?
I definitely don't think that brands need to be for women or for men or any of that.
Or skew one way, right?
Yeah, I mean, listen, brands can be agnostic. In Solid Core, they made a great point about how they did a retraining of their entire trainer community, the instructors, to speak in gender agnostic terms, right? And it's interesting because nobody wants to be the guy in the room of a fitness class where the instructor is saying, come on, ladies, let's do our leg lifts. You don't want to be that, because just for basic reasons, it's not male versus female. It's just like, it doesn't feel inclusive to me being in the room. So the Solid Core cares that much about, being an inclusive, gender unbiased brands, that they went and they retrained all of their instructors to never talk in terminology that is male versus female, she, he, it, really interesting, right? So it just becomes a question of how are you embracing it and why?
Well, I this was a topic. I went to the Forever Strong conference, which I've mentioned about a number of times on the podcast, Gabrielle Lyon. And there's clearly a lot of research that's coming out now around how to train, when to train, depending on where you are in the month, where you are in your life, age, post-menopause, strength training, protein, sleep. Like, there seems to be a very, very different way of advising and coaching people, particularly for women, compared to as like a lot of the information is generally around men, including a lot of the research that's out there. So I think to sort of generalize is going to be doing a disservice for people. It's going to be doing a disservice for certain people in the audience. The other interesting thing is I interviewed a gentleman last week about strength training, and a lot of times when you talk to women about strength training, the conversation is, well, I don't want to get big and bulky. Well, this gentleman, John Jakrish, was actually talking about how you would train the muscle differently if you wanted to build it for sort of mass and size, and if you wanted to avoid that mass and size in terms of how you would, like types of reps and pumping blood into the muscle and all this kind of stuff. So his research seemed to lead him along the path of, well, depending on what you're looking for, you would strength train quite differently. So even something as simple as that, that's something I've never heard anyone talk about, but it's very relevant if you're trying to get someone strength training, but they want to keep a long and lean type of look. So I do think that it's difficult to, if you want to really do a good job, I do think it's difficult not to start to specialize in information, content, communication, language, and all that kind of stuff, is my view. Maybe that's a big opportunity.
And I'm just wondering, too, from a woman's perspective and leading that forum, did anything come up about how to leverage technology and wearables to better serve the women in fitness community?
I think it's a lot of the conversation because it kind of goes back to diagnostic and assessment. So if we want information about you, is it just male versus female, height and weight? That's what it used to be, right? And so now what is it beyond that to help curate the conversation, to help you get on a better path? But we didn't go into specifics, but obviously there's a lot going on in temperature readings. I was thinking about that today. I don't know the answer to this. This is very simple, but it's the first time I'm actually asking somebody, so we're doing it here on the podcast. So my Oura Ring monitors my menstrual cycle. Do you, Mo, you wear an Oura? Do you have temperature chart for menstrual? So
menstrual cycle.
Not for menstrual cycle because I've identified as a male.
You don't have a menstrual cycle
because I don't have a menstrual cycle, but Lauren does.
Yeah, my wife has the same. Yeah.
So I think they look at your gender to give you those features, and they're tracking to be more predictive about when your cycles are happening, and it learns over time, right?
Yeah.
And I think the reason why that's important is because when you have the temperature difference during a cycle, you're not getting sick. But if you were to have a temperature difference or an increase, when you're not in a cycle, or for us, it means that our body is stressed and that we're prone to get sick. So that it might sound like insignificant, but it's really meaningful. Because if you're going to use that as a metric to change your behavior, maybe you take more echinacea, you take emergency, whatever you do to recover, in that case, you don't need to recover.
Well, you shouldn't be doing, from what I've heard, women shouldn't really be doing HIIT training during that period. It's advised against having that type of training. So if let's say you're going to a boutique studio and you're doing the same workout all the time, that's probably not advisable at certain times of the month. I think that's quite a known thing, isn't it?
Is that
now?
true?
Well, but that's very interesting. I mean, there's been this conversation about the wearables starting to give you very interesting data readings on your body. And then the next question becomes, and then what do you do with it? Right? So, I mean, as simple, and this I feel like was the conversation of the last 12 months, if your recovery score is low, you should do something kind of chill to recover. If you're doing well on your score, you can go out and, right? So I don't think we're at the point yet, Matt, where you're seeing the hormone or the temperature fluctuations or hormone fluctuations actually tied to things by the mass market, mass products. There are a few companies that are leaning in that direction, right? That are saying during menopause, do this. I mean, obviously we talked about P-Volve being one of those companies. There's a few of them piping up, and Les Mills has gotten into that space, I believe, right? But in general, that's, I think, where this is all going, getting really prescriptive off of those things, your hormones, your temperature, all of the additional data that we're starting to gather.
Dr. Stephanie Estema, she talks a lot about this. I had her on a few years ago, and she's very, and you should check her out, actually. We should get her back on, but she's very much of the opinion of, like, you've really got to, women are totally different. Women are very different to men, and although she's been talking about this for a long time, I'm sure there's many others that are doing it, you've got to look at things very, very differently, I think. And just even that sort of pre and post menopause, and including how you would train, how you would sort of prepare for that, and your strength training, your protein intake, all of these things are, I've not really studied it because I don't necessarily need to for myself, but I share this with my wife. There are a lot of things that you kind of need to get in place, and I don't think it's common that this type of programming is really discussed in general.
And then one other topic we really covered was, women leading and modeling for children, right? And so if the way of the future is a healthier society, how are women showing their children as they're going through the ages to be active and healthy and have a good relationship with food and have a good relationship with sleep? Are we talking about sleep too much? I worry about that. My house talks about
You
sleep
don't
a lot,
sleep over
and
it.
my kids sleep well.
Yeah.
I don't want my kids to start hearing us worrying about sleep. Everyone says that's your first problem with sleep is when you start thinking about it too much, and I'm like, what are we doing, guys? But anyway, so that's an interesting side too. Obviously, women in leadership and women in fitness and women staying active and women in sport. And so we had a really great conversation in the Women in Fitness Forum. And, it wasn't to be exclusive. I have to say this, like, it wasn't to cast a gender gap. It's just, again, to like forward the population of the industry, which really wasn't so specialized until recently. Like, we're keeping going, and it's due to a lot of technology, thanks to you, and education, thanks to this summit and the podcast and everything.
Well, Debra, I know you have to run to a panel.
Yes.
What's your next panel about?
We're doing the growth of community, growth of growing digital communities. So I'll be moderating that with some great brands that are really big communities and figuring out their tips and tricks to keep growing.
Well, thank you for coming on, Debra.
Thank
As
you.
always.
Thank you.
Trent Ward, founder and CEO of FORME, and now also climber. We'll get into that here in a minute, but thank you for joining us on L.I.F.T.S.
Great to be here, thanks.
At the Connected Health and Fitness Summit. I feel like your story epitomizes what this event is really about.
It could be a precursor.
Yeah.
There could be some foreshadowing here.
So tell us a bit about FORME for the audience who might not be familiar with it, and kind of what that journey's been like.
So FORME is a connected piece of fitness equipment, strength training, dual arm cable machine. There's some other players out there that have some similarities. Aesthetically, we have a mirror on the front as well. So, we're I'd say triangulating around some of the competitors. A little bit later start, higher end focus, personal training live one-to-one, slightly different business model. And then really now moving pretty strongly into B2B. And so, I think the B2B approach is more capital efficient, right? Certainly the whole industry has had a reset from that perspective. And then certainly the acquisition with Climber is in that same vein, and kind of doubling down on that path and having an affordable cost of acquisition from a customer perspective.
What do you mean capital efficient in the B2B compared to B2C?
Cost of acquisition, so paying Facebook or Google to acquire a customer, and especially we're talking about hardware, we're talking about things that are expensive, they're high consideration goods, and given that long sales cycle, you need to show them a lot of ads for them to pull the trigger, and so that ends up being very expensive. I think for all the profitable hardware companies, which frankly were all started before the internet, right? They only had one channel, and it was B2B, and then consumers would see equipment in gyms or chains, wherever it may be, and eventually buy them, sort of as a no CAC purchase in the future, but it takes time. So we went from a world of no constraint on capital, grow as fast as possible, to now constraint on capital, which means you grow more slowly and more efficiently. And so I don't have an acquisition cost necessarily in my P&L. My distributor is making a margin on top of that. So if you looked at the whole P&L of the channel and the value chain, there is acquisition cost in there. It's a markup on top of my revenue. It's not below my revenue and gross profit.
What do you think? How are you looking at your business? Because from what I understand from FORME and a bit about Climber, there's a lot of tech, content, development, which is a big cost and a certain skill set. But then you've also got the hardware side of the business, so manufacturing, steel, that kind of stuff, and different skill sets as well. Like, how do you look at those two businesses? How do you continue to innovate, stay ahead? I guess Peloton is an example that have probably been through this and now seem to be moving to a little bit more of a content and tech company because of the difficulty on margins and that on the product side. So how are you looking at it, and why are you sort of making some of those bets as you've just recently done?
There's a lot of companies that make bikes. And so when you think about being differentiated in the spin category, content's probably one way of doing it, design. I think when we look at our products, I believe they're much more differentiated. There aren't many competitors. And the hardware itself is unique, and therefore there's a value prop for buying it, regardless of whether there's content or not. And content becomes a different part of it. But we have patent protection on all of this. There are not many options for consumers to choose. It's a new category with sort of the digitization here. And so our value prop is more that we're achieving something with the hardware that you can't achieve with something else. So Climber, it's a vertical climbing device. There's kind of one other major player out there, candidly sort of probably stuck in a different generation. And we provide a different use case, and we're actually seeing that as well in our gym partners, where we're on the cardio floor. You're replacing an elliptical with 2 or 3 of these for about the same cost. It's innovative. There's not a lot of innovation. The human body hasn't changed much, but this is more glute development, right? And I think traditionally that device has been put in the corner, the Climber, and now it's a little sleeker. There's a screen with some content, and so I think that there is a real path for this modality. The other use case we're seeing is that actually gym chains are, we have a big pilot here in Los Angeles where gyms are rolling their spin bikes out of the way in the group fitness, and they're putting 10 in there and everything. And again, I think all of us, and especially our gym partners, are trying to drive engagement. They don't want churn, and they need to show newness to their customers and their members. This is a new modality, right? It's pretty niche. Not everyone has a spin room, but this is interesting. So I think that has uniqueness, and it can be activated by in person, right? Or it can be self-directed. And I think having that flexibility makes us a better partner for gym chains, right? We're not trying to put anyone out of business or change where it is. We need our channel partners. We need to be in those clubs. Now, I'd like to find a way to get a rev share with them and generate digital revenue, but that's in partnership, not in substitution for where they are. So that's very much where we are on the Climber side. Traditional model, either in the gym, it's either on the floor or it's in the group fitness room. And we have a very strong partner that's been around for a long time. Woodway is distributing that product exclusively. So they've been selling incredibly high quality product that's differentiated. It takes a lot of education to sell a $15,000 treadmill relative to a 3 or 5. And same thing with selling our product, which is new and takes a bit of a story. They're the right partner for us.
Yeah, and obviously, we know Climber because we actually worked with Climber in the beginning. And something that we've talked about on this podcast and just in conversations, Matthew often sends me pictures of gyms and all the screens that card equipment has, right? He says, look at all these screens. Then he goes to the strength area, which is mostly where escape equipment is found, and there's no guidance, there's no screens. So on one hand, you've got this opportunity to interact and interface with the equipment and get guided coaching as you could with Climber, which is fantastic. But then I think what you have with FORME gives the opportunity to tie that circle together, right? So you can now put a connected product in a gym. And you're working on both the things. You're working on improving your VO2 max and your strength, 2 key indicators of improving your lifespan and overall wellness. How are you thinking about that? How are you thinking about how the 2 products can work together?
There are certain locations where one is more appropriate than the other, and there's certain locations where it's both. So certainly anything from that is a smaller footprint, we're incredibly efficient from that perspective. It's a dual arm cable machine. It's against the wall. So hospitality, multifamily, places where you want to provide a lot of variety to consumers, but you don't have a lot of space. So that definitely works. I think in the gym setting, it's unlikely that FORME is going to be there because they already have a bunch of strength equipment. That stuff doesn't really depreciate. We've found a lot of success on the FORME side in performance environments such as golf, right, in a country club, where both the nature of rotational work and multiplanar is especially suited to a cable machine. The aesthetics of a mirror and a nice device fit that environment, and that member isn't comfortable on a selectorized equipment or a squat rack. They're like, I'm a golfer. I want performance. I don't want fitness. It may be the same thing at the end of the day, but how we talk about it, how we position it, is different. The other. And you could put a Climber there, but that's not their goal. Their goal is to get stronger, to hit the ball further, more so. So it depends on the use case. Some of the big unlock on that, though, is also we have a partnership with Titleist Performance Institute and TPI certified pros. You're activating this not so much with the content and pre-recorded, but actually with a coach that's looking at you, right? And so we're seeing a lot of these change. If we started with kind of, hey, Peloton, here's a screen on a bike. That's kind of one thing. That's one to many. We're, more into coaching, more into one-to-one, and probably more niche settings.
Just for because we didn't quite touch on it, and for the people that are listening, so just tell us a little bit about your company and maybe a bit more clarity around the acquisition that you've just made, and I suppose the vision for your organization around your products and where you see yourselves in the industry.
Definitely. So I think there's a lot of great companies that have been started in the past 5 years or so, but the environment's completely changed, right? Both from which channel we're in, home or gym, as well as capital and capital costs, and I think it's inevitable that there will be consolidation. The Climber transaction is I'd say a textbook example of M&A. We took out a lot of cost, duplicative people. We picked up an extra or a new channel to sell our existing product in. There's an installed base of consumers that we're now starting to talk to about the FORME product and coaching. So there's sales synergy, there's distribution channel increase, and there's kind of a diversity of revenue. I think that's a blueprint for more deals, right? At the end of the day, there's not enough capital for all these companies to survive. Right? And that ultimately means taking cost out, and I think everyone's tried their best, but there's not enough capital to grow if you're only in one channel. There's not enough growth to keep these businesses all alive and funding, and so, most of the products here, customers love them, right? And they should exist, but it's really about how do you keep them alive and how do you find the right homes, and part of that is to put them together, right? And so,
I think just one last question. FORME is a public company, so you're publicly traded.
Yes.
There's a lot of challenges that come with that. And I've always wondered, when I saw you go public, why did you go to the public market? Was it to get capital? And what's it like, being a company of your size who is public, because you've got a lot of expenses tied to the reporting there?
So there's definitely a cost to being public. The offset, of course, is that you have access to capital that's much less expensive. The U.S. capital markets are the deepest, most liquid in the world. It was a choice and a strategy that we decided upon in spring of 22 to pursue this. One of our main investors does a lot of biotech investing, and even though we went public with effectively no revenue and at the beginning of our commercialization, in biotech that's not uncommon.
That's right.
You spend private money to build the drug, and then once the product's ready to be commercialized, you get public market dollars. And so there's a model there from that perspective. And there's also another thing of, at a very small company, you can get public, regardless of what's happening in the market. Okay. If you're a big company, that's another thing. If you're in the middle, it's tough, right? If you're worth 200, 300, 400, 500 million, even $1 billion, it's a small deal. It's hard to get institutional investors to care. Your liquidity is low. It doesn't quite pencil. When you're a retail-focused stock, it's a different calculus. I spent 8 years at Citadel, and I ran the IPO desk. So in Europe, so I've been around IPOs and deals in public markets for a long time, and I'm comfortable there. One of the things you realize is your stock can be down, it can be up, it doesn't matter, right? Ultimately, it's over the long term, producing cash flow. Eventually, stocks find their value, and there's a lot of emotional volatility that goes with that. I went through it for a decade, right? I've been over. I know it. I'm not saying it doesn't necessarily affect you, but it's a muscle I've worked before. So I'm actually quite comfortable there, and I'd say I struggled candidly when I was starting this business, talking to venture capitalists. And I came from a hedge fund, and I went to I was a banker before that, and I sort of kind of thought, hey, venture capital is finance, and it's not. And it's a very different model. When I used terms like EBITDA, they said I was using jargon, and so the fact that we're back to cash matters and these things matter, like it feels more comfortable, right? And so I'm, at the end of the day, return on capital matters, financing matters, all these things. And so public company, I think it's worth it. One of the challenges in the space is there aren't many public companies. And so as an early stage investor, you always say, well, what could happen positively? and you point to the public company like, we could be that. Well, candidly, that hasn't been a good thing to look at in the past handful of years, so it's very hard to find
Especially
private capital.
in our industry.
Specifically in our industry, I mean, specifically the one public company that's out there. Or, I mean, you could also point to
Beachbody.
some of the other ones, Nautilus, the Neboflex.
Yeah.
It's challenged. I think private capital is hard to find, right? And so public capital was a better place to be, but also it enabled us to acquire companies. Because,
what's your revenue now then? Or last year, sorry.
So we haven't reported our full year, but
Right.
I mean, candidly, not much, right? And you can sort of see that in the financing. A lot of this is sort of going forward. So we've guided that we'll do between 15 and 20 million of revenue this year in 2024, mostly driven by Climber. I think that's earlier in its commercialization, and it's more selling more volume to kind of chain accounts, whereas the FORME business is probably has a higher digital mix and lower volume, and so slightly different numbers and shape, but that becomes a growth story back half this year and into next year.
Right.
I mean, look, for being a young company, I was just looking at your market cap. You're close to 10 million. Beachbody, who's a mature company, market cap right now is 70 million, right?
So take a look at Bowflex. I want to say it was like 40 or 50 or something. And it moves around. These things are volatile, you know.
Really?
So
Wow.
look,
So all I'm saying is that, you know, having a market cap of 10 million, when you look at some of these other companies who've been around for decades and have a lot of subscribers. I mean, Journey has almost 1 million, I think, subscribers or users rather. Beachbody has almost 2 million. It's hard to see, you know, where it can go, but it's really about, I think, the potential of what can be done by bringing things together, because this is truly where I think 1 + 1 is 4, not 2.
I mean, you know, when you look, if you combine Climber and FORME, you know, A plus B, X amount of revenue, Y amount of costs, right? There's 65 or so employees between the two businesses. Once the acquisition's complete, there's now 35.
But then you add Woodware on top of that and what Woodware brings to the table.
So, you know, we're adding contribution margin without really adding cost.
Right.
So
That's the key.
you can either grow and generate more gross margin or more contribution margin, or you can take cost out. And I think the last step of cost saving that we've all been going through is really about consolidation. You know, you don't need 2 executives, 2 CFOs, 2 into this stuff, and it allows the product to live, right, and to be and that's good for consumers.
I think that's the thing I've noticed, and I don't. It's been talked about a little bit, but you're right. You know, there's a lot of some great ideas that raise a lot of money, and they've got a decent infrastructure, like Climber being one of them. We've followed that for a while. They've developed the product, probably hadn't quite got it to where it needed to be, and the sales hadn't gone within the time period they'd hoped, and they probably had a little bit of post-COVID, bump like everybody else had, but now
they have one more problem I'll tell you about, but go ahead.
Okay, but there's probably a few of these that, as you said, the market probably isn't enough to sustain those overheads, but probably the content development is, my guess is similar, the software development is probably similar, the engineering and the manufacturing and sourcing is probably similar. So like you're doing, you know, putting 3 or 4 of those kind of complementary things together with a quarter of the cost base suddenly can, you know, if you've got the funding, can be something interesting in probably 3 years' time when the market starts to turn around again, which I'm sure it will do.
So there's a number of things there. You know, one is all that development is a sunk cost, right? You know, if anyone, so let's pretend none of this stuff got built, and we said, hey, let's make a blank, right, a connected strength machine or something. I need X millions of dollars. You wouldn't find it. Right, so there's an element of you couldn't remake any of these businesses from a fresh start. You know,
Today.
That's defensive, right?
Yeah.
That's you know, there's a barrier to entry.
Mm-hmm.
You know, we have patents and we talk about patent protection of investors, and they're like, well, can you stop this? And it's like, the thing that stops you isn't the patent; it's the $50 million or the $100 million you need to make the thing.
Yeah.
But once you've made it, you know, it's on cost. Now, the unfortunate part is they're not valued at the same price, so those existing investors or the previous investors took a haircut. But from here, you're taking an asset that you can monetize and you can make a return from, you know. And so the Climber one, there was a little bit of the channel, the COVID stuff, and you know, it was consumer, and now it's B2B. But they also had a V1 and a V2, and V1 partly because COVID was, you know, gangbusters, right? You could sell anything. they started shipping that product probably before it was ready.
Yes.
And they had some quality issues. And that ultimately was very expensive and required them to go to V2 and all this other stuff. And that mistake, understandably, right, was what meant that business had to be recapped and change hands. Making stuff's hard, right? Like, I'm embarrassed to look back at any of my previous expectations and projections of both timing and cost and any of this stuff. It's really, really hard. And so there was money to support those things and get them there, and that money's not there anymore, but they eventually were built. Right? Mm-hmm. And so we're picking up things that have value. They just need to be put into a different place. So different business model, B2B, right? Or in a lower cost base, right? And so these things work, right? It's picking up rocks and polishing them, so.
I like that.
Yeah. Well, with that, Trent, thank you so much for being on. I mean, I think, we'll be following FORME and the Climber story, which probably get you back on in a few months just to see how
I can tell you about the next deal.
how it's going.
Yeah.
Okay, yeah, there you go.
Thanks very much.
Thank you.
Appreciate
It's a pleasure.
Thanks, Trent.
Thank you.
So Jeff Yasuda, founder and CEO, co-founder and CEO of F.E.T.S, welcome to L.I.F.T.S at Connected Health and Fitness.
Yeah, man. Thanks for having me.
No, thanks
How
for
fun.
being here. It's so fun. So a couple of things. I was thinking about an intro right before while you all were chatting.
Right.
So you are as passionate about music as I am about fitness. But I'm going to bring this full circle.
I'm passionate about fitness too.
You are. I'm going to bring it full circle to Connected Health and Fitness. So on the first session, we were comparing us. We had Krystal Zell from Tonal on the panel.
Sure.
And we were both like, hey, we both love our tonals. And I'm thinking to myself, he's pulling up his tonal strength score. And I'm like, of course. I'm going to be stronger than Jeff. So I pull up my total strength score, and I'm lower by almost 150 points. So I think the algorithm's here to blame. Because
Who's counting?
who's counting? But thank you for being on.
Yeah, thanks for having me.
So you've been in Connected Fitness, and you've kind of been one of the main players, or one of the main players in music for the last several years. You've seen the boom happen during the pandemic, where you had a ton of brands coming to you because you were pretty much the only game in town. We have been big integrators. We've had a long-term partnership, friendship now. I'm really glad to know you. Finding new things about you.
You pick up my calls when I don't
pick up your
text you in
calls, and then I
advance.
find out some things like you might be stronger than me, which no one would think. But
Which no one would think. Wow, ouch.
I'm just
okay.
saying. So but you've also seen the rise. You've seen a lot of change happen over the post-pandemic. What do you see happening maybe speak a bit about 2023, what that year was like for F.E.T.S,
Yeah.
and what do you see happening in 2024 and beyond?
Yeah, well, and to add some context, during the pandemic, obviously people were working out at home. They couldn't go to the gyms, so their digital footprint was really the way folks worked out. And what was really interesting is that kind of changed the mindset, right, of fitness. Wow, I can have a great workout in the comfort of my own home, right? You avoid the commute, you avoid having to shower at the gym, right? You could just do a quick workout and get back to work, essentially. That world obviously has changed dramatically, right? And so, and I think where you ask about the market, how 2023 was, 2022 was brutal. 2023 was kind of the comeback year, at least for us, right? And, to add a little more context, we power probably 50 of the top fitness brands in the world, right? So we have a very good overview on how folks are doing, right? And 2022 was tough. 2023 came back. This year is an interesting one, right? And I think it's important, particularly for your audience, who may be fitness founders, CEOs of companies. It's really hard right now. Really, really hard. And as much as founders, look, I am one, you are one, right? As much as founders want to say, I'm crushing it, the market's great, growth is amazing, it's really important to be authentic, right? Because mental health amongst CEOs and founders is probably at its worst level since the .com boom, right? And the reason being is that founders feel alone, right? And when you're going through a scenario like today, that is very hard. This is one of the worst capital raising markets since, 2007, maybe even since, the .com boom, right? It is very hard, right? You're seeing consolidation in the industry. You're seeing a lot of companies who can't raise go belly up, right? And so now's a really important time, right, to think creatively about what I have control over, right? And what you do have control over are your expenses, right? You can control the amount. You and I, Mo, have talked about this at length, right? Making these tough decisions for the longevity of your company. So it is hard, right? I think there's a lot of strategies that will work in this market, but I think people, all CEOs, executives have to make some tough decisions to think about the long game, right?
What do you say when you say there's some strategies? Because that's an interesting, obviously it is very competitive. There's a lot of people in the space and from all areas, coming from outside and also from inside. I guess, thinking about the long term, making those investments into those long term things. But when you say strategies, what are you thinking? Because if revenue isn't there and margins aren't there, it's tough to raise. Where are you focusing outside of just cutting costs, which is also difficult to run a business when you're cutting costs as well?
Absolutely. So in this order, right? Again, focus. We talked about cutting costs. The second is to really evaluate business opportunities. Pivot is a very strong word. It is scary as hell to do, right? But thinking creatively about new channels, and one thing that has popped up for consumer-based fitness companies, which I imagine is mostly your audience, is many of them are actually looking at B2B, right? So how can I actually go from B2C to B2B and find partnerships where their content, right, is potentially available, in corporate environments, right, and part of a corporate wellness program. Being very creative about how to attract users, right, using American Express, right, as a way, for example, to attract users, right, and thinking very differently about how can I partner, working with Uber. These are all possibilities where people can potentially attract users. Now, not all of them are successful, but thinking creatively about ways to generate revenue opportunities outside of consumers.
Well, that's it, right? Because people think that fitness happens generally in two places, the home and at the gym.
Right.
And that's been it. But really, in order to achieve positive health outcomes, you've got to be thinking about fitness all the time. Even, we're at a conference now, what are we drinking? What kind of food are we going to be serving at lunch? And how do you monetize, track that, use the data to build positive health outcomes? So I know we've talked about pivoting a lot. You've entered or trying to enter some other industries. And one interesting conversation that we had about a month ago was about mental well-being and also music's impact or influence on achieving success on therapeutic actions for diseases. Do you want to speak a bit about that?
Yeah, well, and the pandemic obviously was a global health crisis. We're also in the midst of a global mental health crisis, right? And we've been spending a lot of time is in this, what I'll call digital health arena, specifically working with, for example, we're working with Professor Daniel Bowling at Stanford to really go from that subjective, hey, this music is good for you, listen to it, to science-backed, proven in a clinical environment around certain types of attributes within music that will lead to enhanced states of whatever it is, relaxation, getting excited, to do a workout, whatever it might be, getting to sleep faster, right? And music is playing a very, very important part, with this concept in the healthcare world, or digital health, I think more specifically, this thesis around software as a pill is now becoming more and more prevalent.
Software as a pill.
Software as a pill. And the FDA is actually fast-tracking some of these companies whereby physicians are prescribing an app to solve a particular ailment. For example, stroke survivors. And this stuff is fascinating. So speech is a left brain concept, right? Music is a right brain concept, but singing is a full brain concept. So they, scientists have figured out that stroke survivors, if they who obviously have damaged a portion of their brain, if they are relearning to speak, it is faster to get them to sing than get them to talk, right? And with that though, so we're talking karaoke, right? And as people, want to sing a song that they know and love, there are music rights that need to be addressed behind that. So even if it's a good, feel-good thing, you still have to make sure the rights holders get properly compensated. But this is just one example that's happening, around sleep, hypertension, all of these ailments that affect, a large portion of the population.
How are you finding with what you're doing with music? Like, it must become a bit of a minefield now with digital, in-person, hybrid solutions. Like, how is that keeping up with the changes in technology and people's behaviors around music?
Yeah. What's incredible about tech and why we're in the business is that it is constantly evolving. It's making people change the way that they've done business. In this case, the music labels and publishers, are still adhering to some laws, and regulations that have been in existence since the early 1900s, right? And so a lot of the complexity around music licenses is that, even the Digital Millennium Copyright Act, which covers something called Section 114, which is internet radio in the United States. This was written in 1999, 2000, right? And so even before the concept of social media, right? And so a lot of these laws that still are in place are written before even any of this stuff has come up, right? So to your point, the industry changes very, very quickly, in some cases so fast that the regulations, it's not even the same language anymore. Right? So this is where it's really important. And again, we're partners like Sweatworks, that we've had with Sweatworks. We have the same partnership with the major labels, the major publishers, right? We have conversations about, hey, what do you think about this use case? What should we do here? Right? And very transparent discussions. Sometimes both of us are like, I don't know, right? And that's where, again, there are some rights holders, some major labels that are very open to experimenting, innovating, kind of figuring this out like a startup would, right? Let's test the market. I don't know what the right answer is. I have no idea what the right compensation mechanism, but let's just see if this thing works, right? And like anything, everyone has to evolve, right? Fitness companies have to evolve, music companies have to evolve. We have to evolve. Right, but that's what keeps it exciting, right? That's why I wake up every morning fired up to figure it out. So.
And you're doing a presentation tomorrow. What's is it with you, Mo, as well?
It is, yes.
What are you guys talking about?
The boss, yeah, the boss. Well, you tell me. What are we talking about?
Well, I think we're still working on the finer details of it, but I guess by the time this airs, it would have been over. But it's really around what we talked about. It's a closed room. It's invite only. It's just founders and CEOs talking about how do we navigate, I think, what is still rough waters.
Very, very true. And I think, one of the things I really want to emphasize, and we were talking about this before, is that it's very lonely at the top. It's very lonely at the top. And for me, I've been doing Feed. We've been doing Feed for about a decade now, right? And it was pretty gloomy at certain times, right? And that's why I remind founders that it's not about the end game, it's about the journey, right? And part of this process is figuring out a support network, because there are some things that happen in your business that you can't talk about with your spouse, with your investors, with your employers, with your employees, with your co-founders. There are things that will blow your mind, right? As you go through this, this up and down struggle, right? And so, but the one thing that has been incredibly helpful for me is this group of disinterested, not uninterested, disinterested parties, meaning other founders, other CEOs that have kind of been there before, where you can talk transparently and get away from the bro culture of, yeah, I'm crushing it. Because the reality is that 19 out of 20 startups, it's not 9 out of 10, it's worse. It's 19 out of 20 startups fail, right? So you go to a cocktail hour and all 20 folks are saying, we're crushing it. So which one of you is actually being honest? And I actually find it's refreshing, and and you get this, right?
Yeah.
You have to be careful, right?
Well, I think even like the relationship I have with you, I also have with Matthew, and we talk about challenges, we talk about what's really coming out, and how we've got to pivot and change. I think all three of us we should get together outside of this, but
Yeah.
we've actually had
nice
a lot
bottle of
similar
vino.
challenges. That would be great. Yeah. Well, thank you, Jeff, so much for joining us, and I
Yeah,
hope you
man.
enjoy the rest of the conference.
Thanks.
Thanks very
I
much,
had
Jeff.
a blast. Thank you. All right,
And
cheers.
we'll do it tomorrow.
we will.
We'll do it tomorrow.
All right, cheers.